Kenyans out there are going through a problem of managing their finances. It's what we call money personality. How do you behave when you've earned your money at Mother Teresa personality? You get it? We want to show that you are Mother Teresa. In fact, you meet a street kid, you say that these people are supposed to be assisted.
They're suffering.
They're suffering. You know, I formed a company in my head. That company was called the Nairobi Vigilant Security. I kept meeting challenges like, where are your offices? I do not have offices. Or how many guards do you have? I do not have guards. And then how much do you charge? I didn't even know the prices or how much. So it flopped until I became annoyed with that business. I told my friend, take everything. I don't even want to see. I just want to be who I am. Me, I was much fascinated by what makes businesses to fail. I looked at it and I felt like, bam.
This is
the thing. This is my field.
Yeah.
This is what I've done. That is how I got into thinking that why not create such kind of a company?
Yeah. You had staff?
No, I'm alone. I'm the staff. I'm the cook. I'm the cleaner. I'm the messenger. I'm everything. Yes. I tell you, I knew very well I don't have plan B. It is Ecovest and Ecovest alone. I was marketing it in the morning, after 1 hour, after 2 hours, after 3 hours, after 5 hours. In fact, I was removed in so many WhatsApp groups.
Welcome again to another episode of Unlimited by Muna. Here we discuss the principles of modern business and also educate on how to start, manage and grow your business. So today we are privileged to have Mr. Isha Dunga. And Mr. Isha Dunga, you can just get right into introducing yourself because now we just want us to know a lot more about what you do. Okay. So you can start by introducing yourself and what you do.
Okay, thank you so much viewers. My name is Isha Dunga. I am a finance consultant. And I run a company by the name Ecovest Consultants Limited. This is a company that is dealing with matters of finance consultancy services. And we also do business advisory services. And then as well as we also do real estate services.
Okay.
So, and I'm really happy to be here.
Yeah.
And thank you so much for actually hosting me.
Yeah.
Yeah.
Karibu.
Asante sana.
So you are a master at bookkeeping?
Yes, actually, I hold a Bachelor of Commerce in Finance. And then I also hold a Master's in Finance and Investment. So basically, my services, or the services that we offer, are surrounding the professionalism in terms of bookkeeping, tax services, training on personal finance services, as well as also the real estate services. Okay. So that's where basically we are.
Okay.
Yes,
so
yes.
You train people on matters bookkeeping. Maybe you can begin by what exactly is personal finance management.
Okay. When you talk about personal finance management, you're talking about to my heart because as an individual, I had been privileged to get into employment. At the same time, also now start my own company and be able to run it. When I was in my own when I was in the employment sector, it is something that was very, very, serious. I earn a lot of money, yes, but then by the end of the month, or when I'm waiting for the next salary, I find that I'm already broke. I cannot be able to explain how I used the money that I already earned. It was very difficult because even by the time I was getting out of employment, I was earning to the tune of 80,000 shillings. And then when I look at my expenditures, they were not able to actually match the 80,000 Kenya shillings. In other words, I had a problem of personal finance management. And so that being the genesis of my passion with personal finance, I felt that many people, many Kenyans out there are going through a problem of managing their finances. And so in our business consultancy services, we started a section of trainings. And in the training sections, we do a lot of trainings. We do trainings on matters corporate governance. We do trainings on business services. We do training on credit management, investments. But one training that I am passionate about is the training on personal finance management, which basically deals with attracting, managing, and multiplying your money. So money has got three perspectives. You have to attract the money, and everybody else attract money. And then when you have attracted this money, then managing this money is about how you're managing your expenditures, how you're cost controlling, and then come to the third one, which is now money multiplying. That is now when we talk about how you are able to invest this money in order to bring more money. Yes. So that is all about personal finance management. Personal finance management is about making sure that whatever you've attracted, you can be able to manage it.
Yeah.
And then once you've managed it well, you can be able to invest it and then make it to produce more. That is why actually I've even been able to write a book on personal finance management, which is giving an awesome training model or module whereby you can be able to know how to attract the money, and because every one of us has got a potential of attracting money, and then once you've attracted that money, then managing that money, and then once you've managed it well and make sure that you control your expenditures and all that, then you can be able to invest it and be able to produce more of the money that you've already had.
Okay.
Yes.
In all that you are telling me about your services, I'm more interested in the bookkeeping part for the business person.
Okay.
So how do you go about that?
Now let us talk about bookkeeping. Many businesses out there, probably even startups, do not get the essence of bookkeeping. You know, bookkeeping is a process.
Okay. Before even maybe I think you may try to first define what bookkeeping is.
Yes.
Because maybe something people are having a challenge with, but they are saying hearing this vocabulary that they don't even know what it is. So maybe define what it is simply, and then now get into the specifics.
So bookkeeping, when we talk about bookkeeping, we are talking about a method of record keeping for the transactions that are taking place in the business. When every business is being run or started, the aim is to make profit.
Yeah.
And as the aim is to make profit, you make profit through the transactions that are taking place.
Sure.
What are these transactions? Somebody come to buy your service or somebody come to buy your goods. And when he buys the service or the goods, then he gives you the money.
Yeah.
That is a transaction. When you use this money in purchasing something out there, probably purchasing your input, purchasing other services, then that is also a transaction. So when you talk about bookkeeping, we are talking about a system whereby you are able to record all the transactions that took place during the time you are doing the business, either when you are purchasing or when you are selling. In short, that is what we call bookkeeping. And bookkeeping can be done both manually and using a system. So you can be able to do a bookkeeping using manual. That means you just go to the shop and purchase what we call a ledger book, and then once you purchase the ledger book or maybe a 4-square book, and then you subdivide the middle and then start now making the records. You can have the section written revenue, and in the revenue now you start by now recording this particular date, this client gave me this much. And then this particular date, this client gave me this much because of this service. You are doing what we call manual bookkeeping. So manual bookkeeping has been overtaken by time. Because who has the time to do manual bookkeeping? That is why at some point of time there are several companies that have come up with certain systems that are allowing them to do what we call system-based bookkeeping or automated bookkeeping. I know one company by the name Research that I've actually interacted with before, that they have created they have embedded in their systems also a section that is dealing with bookkeeping services. We have got other systems that are also in the market which are dealing with bookkeeping services. But then what we have to understand in the bookkeeping aspect is that it is a method whereby you are keeping the records but in an automated system, whereby you can be able to track that information at a later date and use that data for a purpose of decision making. So bookkeeping, that is what it means. Now, what are the importance of bookkeeping in an organization? In an organization, bookkeeping is very key, and I will give 3 fundamental functions or reasons as to why we need to do bookkeeping. Number 1, bookkeeping will always help you to track your performance. As a business, it is very key to understand that performance is the number 1 reason as to why you are putting that business there. You want to perform well. You want to excel in the market. You want to create what we call a market niche. So for you to create that market niche, you have a plan. That plan is called, in the terms of corporate governance, we call it strategic plan. So strategic plan is giving you the essence of where you are, where you are, and where you are going. So how do you do this? How do you measure this? How do you come to the metrics of such particular strategic plan tracking? You can only measure that using a record that had been kept through the bookkeeping system. So when you keep your books well, you will have a way of what we call tracking your performance. That is the first fundamental thing. Number 2, When you are doing bookkeeping, then you are also making sure that you keep your records safe for future reference and future decision making.
Yes.
So you see, when you're keeping your records safe, for instance, you will be in a position to understand that I have got this client, I've got this client, I've got this client. Bookkeeping helps you to have a range of records for your clients. You know where the client is, you know the contacts of the client, you know how the frequency, you even know the kind of services that you're offering to the client. So bookkeeping is giving you an opportunity to underscore the essence of record keeping, making sure that your records are safe. At the same time, you can also be able to understand even the people that serve you in terms of your customers. Who are they? Where are they? What are they doing? And then you can even be able to compare the pricing because of the bookkeeping. Have you ever seen those companies where they say that, where did you purchase the last tissue? How much was it? And they cannot be able to tell because of poor record keeping. So it is very important we get to understand that record keeping helps us to keep our records safe. So number one, I said record keeping or bookkeeping helps us to track our performance. Number two, it makes us to keep our documents and information safe. Then number three, and the last one, bookkeeping helps you to know how much of taxes you're supposed to be paying to the government. You understand the essence of taxes, what taxes mean today. You see, taxes is, when you are a business, tax is part and parcel of your business. And when you do not pay tax, you will be doing business and looking at the window, whether somebody is coming. Every time you want to glance at your shoulder, whether somebody is already asking you about the taxes. And because of that, it happens mostly because you're not doing good bookkeeping. So bookkeeping helps you with three things. One, make sure that you track your performance. Number two, make sure that you can be able to know the amount of tax you're supposed to be paying. And then number three, to keep your records and information safe. That is the essence of bookkeeping. Okay. Very, very important.
Yeah, sure. So you're a tax consultant.
Of course.
What are some of the taxes that yule mwanabiashara mdogo, the small business person, is supposed to pay? Okay. Maybe you can break them down and tell us and explain each one of them, the kind of taxes that are out there.
That is very good. I may not be able to wholesomely list all the taxes that are supposed to be paid by businesses because we have got so many taxes with so many levels. But I will give you the most important taxes that any person who is starting a business should be able to know. So number one, we have got what we call, when you register a company, today, you register a company today, and you get the PIN, there is one automatic tax that you must be able to pay. It is called income tax. Now, income tax is a tax that is charged on your profits. So you take your total sales and then total expenditures, the difference, and then once you've done that difference, then that profit, that amount here, we call it profit. We take 30% of it, and then you pay it as what? As income tax. There are certain complexities in calculations of the correct amount of the income tax, which is more deep. I may not be able to get into that, but for a normal business hustler that is there, you have to start by paying what we call income tax. It is normally paid once in a year. It is once in a year, and it is also being returned once in a year.
At what time of the year?
At every time we normally close the year. Most of the businesses have got different timelines for closing their financial year. But once you've closed your financial year, that one that you've declared in the iTax, the government gives you 6 months to be able to file that tax. Now, let me give you a conventional example. Most businesses have got their financial years starting from January to December. So once you finished the December, then the government gives you now 6 months after the December.
So you have up to June.
You have up to June to be able to clear and return all the taxes. Now you understand why people normally return in June, and where the June is always a very important date. Yes, that is the first one. Number two, you are a business, you are having employees. You must be able to subscribe to what we call pay as you earn tax, which is always being done on monthly basis, and the date is always 9th. When you are returning the pay as you earn taxes, it must be done as early as 8th up to 9th. Now there is something that I need to tell the business owners, which many people do not know. That when you are doing you could be having a small company, and the people that you've employed do not earn that much, which reaches the threshold to start now paying the taxes. That one does not mean that you should not return. You understand? You just return. Somebody is being paid 15,000. 15,000, you pay zero pay.
Yeah.
You get it, eh? But you must be able to take the information of that person to the system to show that you paid a salary worth that much. In the system, it will calculate, and then once it has calculated, it is going to show that you're supposed to pay zero pay, but you've returned.
Yeah.
So that by end of June, when you're going to do now the total, you at some point you're going to indicate in your expenditure that you paid taxes.
Okay.
You paid salaries on an amount of maybe 150,000. You see, KRA is going to ask you one simple question. You are not registered for pay. How did you pay salaries and wages?
Oh.
You get it. So that's when you get.
Before even we go far,
Yes.
there's something that comes to my mind.
Yes.
I'm thinking about a scenario where you said what is being taxed is the total income minus the expenditures.
Yes.
So part of these expenditures, is it
Yes.
only what someone has spent on buying goods for the company, or also salaries and rents are included in
Yes. You see, when you talk about expenditures,
Yeah.
there is a difference between expenditures
that? Yes.
and the cost of goods sold or direct purchases.
Yeah.
You see, for instance, let me give you a conventional example. You are dealing in, let's say, putting up houses.
Yeah.
Or let me know, that one is going to be more complex.
Complex.
Let me say that your work is simply to get
Eggs.
clothes or eggs from the market, and then once you've gotten them from the market, you come and break them and fry them and now sell them, right? So when you go to the market, you purchase the eggs. That figure, the amount that you use in purchasing, that's a direct cost. We call it direct cost. Yeah? So it is falling under purchases.
Purchases.
You get it? Purchases. So when you are doing your calculation, you start by total sales, you remove the purchases. First of all. Once you remove the purchases, then whatever remains, we call it now gross profit.
Gross profit.
Now this gross profit now start now removing the expenditures. What are some of the expenditures now? Your rent is an expenditure. Salaries and wages are expenditures. You have got maybe your transport is an expenditure. Fuel is an expenditure. All
How about my own rent? Does it count?
Okay.
Because I can't work for that business for free. I need a place to live.
That part of the rent of the directors.
Or even salary. As in also I have.
Even your salary is an expenditure.
It also has to be there.
Yeah, it has to be there.
To pay
because
myself.
if you don't put it there, then there is how you're going to pay it for it later.
Yeah.
Yes, if you do not pay. So your whatever you spend, if at all in your what we call in your policies as an organization, that your rent and plus all the expenditures surrounding the directors, there is how they're supposed to be accounted for in the organization. But then there is also how they affect the tax computation, which is a bit complex. But yes, they are expenditures. I can be able to say yes, they are expenditures,
Should they be
and
included
they should
or
be
not?
included there.
Okay.
Yes, they should be included there. So when you look at that, when you've done all that, now the remaining figure is what you now do 30% of it, and then now pay as tax. But again, like I told you, there are certain complexities that surround the computation of the taxes, which you may not be able. If I start telling you now, you may not be able to start perceiving it well, because there is what we call allowable expenditures and disallowable expenditures.
And maybe you can tell us the examples. You know, somebody is watching and they need proper clarification on what is happening.
You see now, when you talk about, let me just give it as an also a bracket, explanation. You know, every business, the KRA has given, under Schedule 11, KRA has given what we call these expenditures. When you spend them in the business, we will allow you to remove them, and then we tax what is remaining. We call them allowable expenditures. And then there are certain expenditures that KRA says that one, we cannot be able to allow you to remove it. We are going to take it back and then now calculate the total and then give us part of it as tax.
Okay.
You get it? And there are so many of them that have been put under that schedule in the Income Tax Act. You get it? So you can be able to say, all these are allowable, these are not allowable. So when it comes to a point that I'm going to teach tax specifically, then I can be able to list, this is allowable expense, this is non-allowable expense, you know. So for instance, you can be able to go for a business trip. That part partly can be an allowable expense. That is, the KRA can allow you to remove that expenditure so that you calculate tax on what is remaining from that sales that you did. And then you can be going on your own vacation. Yes, that is non-allowable. That is, you cannot say that when you are doing the business, I also went for my personal trip, and then they tell refresh, and then you subtract it from the sales.
That's not allowed.
You get, it's not allowable.
Okay.
So you understand the sense of
It does not
allowable.
relate to the business.
Exactly. So we have got what we call allowable expenditures and non-allowable deductions or expenditures. You get it? So that one is a bit more complex. But those are some of the steps that you take in terms of doing the calculations for the amount of tax you're supposed to be paying. But it's very important. Before you make sure that you decide on this tax that I'm supposed to be paying, call on a tax expert to come and assist you in calculating the amount of tax you're supposed to be doing what? You're supposed to be paying. So I've talked about income tax. I've also talked about pay. Let me now talk about VAT. Now, VAT is another type of tax which is on every service and every good that has been that you're trading on, with the exceptions of what has been prescribed by the prevailing income Finance Act. You get the Finance Act will always come probably after 1 year or 2 years, or depending on the government of the day. They will come and describe and say that we are going to exempt this one, we are going to zero rate this one, then we are going to actually standardize this one, depending on the way the government of the day is. So VAT is 16% on top of that particular service that you are offering. So you are offering a service, you price it at 100 bob. Then that 100 bob, you add 16%, it belongs to the government. It belongs to the government. So that is also a tax that you have to pay. It is being returned on monthly basis, and then it is also done on the 20th of every month. Today, the government has said that every business, I don't know whether you are aware, but the government has said that every business must be on e-teams. Whether you are dealing with VAT or not, you must be on.
So by each and every business, you mean even that guy on border?
Every business, so long as your business is registered.
Or registered.
Yes, so long as your business is registered.
And I understand there are two types of registration.
Yes.
The business name.
Yes.
And then we have now the.
Now we have got several types. We call them forms of businesses. Now forms of businesses, we have got the sole proprietorship, where when you go to the e-citizen, you'll register it as a business name. Then we have got the limited liability company, where now when you go into it, when you register it, it becomes that name, then you add the word limited. And then this partnership, where you go and with limited liability partnership, LLP, when you go to the system, you register it, and then it ends with limited liability partnership. Then there are several of them, public liability company. We have got several forms of businesses.
So my main interest is that one was registered
for business.
Even that one is going to be
it's supposed to be on e-teams. Yes. So that when you do business, you invoice through the e-teams, and then the government knows immediately that you've done a business and you already invoiced. So that you don't cheat them when it comes to the time you're supposed to be calculating your taxes. This time around, umeshikwa hivi. You cannot escape. So that is the third one, the third type of tax. I've talked about income tax, I've talked about pay, then I've also talked about VAT. Yes. So then there are now other many forms of taxes that might be able to fall there. There are these ones like you want to import, there's excise duty, there's also where you want to, there's what we call now, let me say something. VAT, when you have, for you to register VAT, according to the Finance Act, you have to be actually earning, or your turnover. When we talk about turnover, it's like total sales
at the end of the year.
At the end of the year should be at least 5 million. 5 million. So you see, there are these businesses that their total sales probably are below 5 million. They are still supposed to pay taxes. But then, which type of tax? Now we call it what we call turnover tax. Turnover tax. Now, turnover tax is for the businesses that are having turnover which is less than 5 million. Yes.
And can it also be a limited company?
Yes.
Okay.
It can be a limited
so it can be registered as a limited company,
but
and if it's not able to make 5 million a year, it will file as turnover tax.
But you see now, sorry, I think I should not mislead people there. So long as you're a limited company, then you're going to be doing that what we call income tax, which is supposed to be doing on yearly basis. But at the same time, when you're a limited liability company, yes, but you're dealing with products. You're selling products. For instance, you sell, let's say, these flowers. So you see, when you sell these flowers, but then the turnover is less than 5 million, you can again now register for what we call turnover tax, and then you'll be able to pay this. But before you register for turnover tax, there's what we call presumptive tax. Presumptive tax. Presumptive tax is a tax based on the amount you are paying for what we call the business permit or county council permit. Yes. So you pay a percentage. It's supposed to be 15% of the county council permit. Then you pay it as a presumptive what? Tax.
So that's the amount I pay at the county council when I'm getting a permit.
No, with the amount you're paying at the county council, you can go now into the system of iTax and register for what we call presumptive tax, whereby you now pay 15% of whatever you paid to the county, you pay the county council. And then once you've done that one, then you proceed with what we call turnover tax. But for somebody who might want maybe more explanation, can still be able to reach us at Ecovest Consultants Limited, so that you can be able to even give you more explanation and more consultancies, on the same. But that is something that is very, very important, that businesses get to know those 4 types of tax. Quite key. Anybody who is in business, get to know these 4 types. Number 1, income tax. Number 2, pay as you earn. Number 3, VAT. Number 4, turnover tax. Get to know those ones. Very key.
Sorry. As you've heard, you can talk to him, Mr. Isha Dunga. He's a finance consultant and he'll give you more information at Ecovest. We'll share his number and you can maybe talk to him after that. So I also have another question.
Yes.
So in regard to someone who is preparing for the next year, in January, for another financial year, what are some of the preparation that somebody is supposed to have as we get into the new year?
Very good. We have got now what we call, corporate preparation and individual preparation. Now let me start with individual preparations. This is the month that an individual is going to earn 2 salaries. This is the month you're going to earn 2 salaries. You're going to earn the salary of November. You're going to earn it probably on 5th or 7th, depending on the time that your employer pays you. And then you're also going to earn the December salary before you close to go for Christmas. You get it? So when you earn these 2 salaries, something will always be in your mind, thinking that you are having the same amount, you're having a big amount of money, but for a shorter period of time. That is when you hear people normally cry that January has got 45 days. You get it? Why is January having 45 days? It is just that kind of a small thinking that you received the salary twice and you forgot.
You forgot this, a whole of January.
Then people start now changing their personalities now when they go home or when they go for the Christmas. There is what we call money personality. How do you behave when you've earned your money and you are having money in the pocket? You become, number one, very soft-spoken, very polite, and again, you are someone who is always very generous. You are not always, greedy. You do not want to be branded names. And that money personality, we call it Mother Teresa personality. You get it? We want to show that you are Mother Teresa. In fact, you meet a street kid, you say that these people are supposed to be assisted.
They're suffering.
They're suffering. But you are still, you're still spending your January, your November and your December salary. You're still spending it in December, during December.
Sure.
By the time it is reaching January, you have already used that money. Then you come to the realization that there is now January month for you to spend on. Then there is no money, you don't have fare. Some people even go back to as far as Western, Nyanza. They don't have fare to come back, first of all, to Nairobi. Leave alone the fare to use in going to work during the whole of that January. They don't. Now what happens? You go to the Shylock, they charge you 30%, they give you the money, and then you will return it, and it will become so difficult. So, individual preparation, you've earned 2 salaries, take the first salary, put it in a locked account, start opening it when you are supposed to start, you shall have received it in January. So, you earned 2 salaries, 100,000 for November, 100,000 for December. Take the second 100,000, put it in some locked account for 1 month. You can even use KCB M-Pesa locked account. Put it there. Open it only on 10th or on 12th when you shall have, when you deemed you shall have received it at that particular time. When you do that, you will be able to regulate now the expenditure of the remaining 100,000 for this month of November. And make sure that your expenditures are budget-related expenditures. They are not impulse-motivated expenditures. It will give you a very good way of ensuring that things do and go well. That is what I can be able to advise on individual preparation for the January financial blues. Now, corporate preparations. Corporates, this is the time that every kind of organization are sitting down to work on their strategy, they are sitting down now to work on the next year's budget. This is the time that corporates are working to check on to how much are they going to spend on marketing, how much are they going to spend on rent, how much are they going to spend on the new employees, how much are they going to spend on the existing employees, and then what are their projections, what are the projection analytics in terms of the sales. Then this one here is going to make sure that a business is well positioned, such that if at all you're supposed to get some extra funds, you have to know when are we supposed to get these extra funds. If you're supposed to finance some of these projects with debts, you need to know what are the cost of these debts, when are we supposed to take them, and then how are we supposed to be returned them, what are the repayments, what are the cash flow implications with such kind of debts. And so all that preparation must be made at this particular point, so that by the time we start January, you do not act as if January came and surprised you that it was coming. No, you make sure that you are all aware and you are very much serious with regards to the plans for the January. Yes.
Okay, so for somebody who is in business or is trying to venture into business, what are some of the key considerations in relation to bookkeeping that they are supposed to have?
So when it comes to bookkeeping and when you want to get into business, please, before you get into the business, do not just do things. Sit down and have a good plan. And that plan of a business, we call it business plan. Now, the business plan is going to be giving you a foresight. There's what we call foresighting and visioning. So you're going to have a foresight of what the business is going to look like in the next 1 or 2 years. When I was starting Ecovest Consultants Limited, I wrote the plan in 2013. Yet the business came to start in 2016. So you can
3 years.
Yes, 3 years. Yes. I was just writing the plan. I see that there's a problem here. I redo it and check it. And then I gave it to one of my lecturers called Bitange Demo, who was the PS for ICT. And he looked it for and he said that this one is very good. Please go ahead. So I planned well. Then number 2, once you get the business plan in place, the business plan is going to tell you your operations model. How are you going to operate this? Then it is also going to tell you what we call now financial and financial management system. So this financial management system, this is where now you're going to start now talking about matters to do with bookkeeping. So one of the key considerations for a small business or any business that wants to start, you must understand that how are you going to keep your records? Which system are you going to use in keeping those records? Which frequency are you going to be keeping those records? And then what reports are you going to get from those particular records? Then when you do that wholesomely, then you're going to be informed on the decisions by those type of records that you already get. So it is very important that you consider how you're going to do everything, the system you're going to do, the reports you're going to get, and then the decision you're going to be able to make using those particular records. But bookkeeping is very key for any starting business. Yes.
Thank you. You've been able to explain at least both the personal aspect and the corporate aspect.